You are listening to chartingwealth.com for Friday, the 18th of March, 2016. We always open with IYY on our 2-day chart, but we're opening with our 4-hour chart. Sorry about that. Okay, 2-day chart. What do we see? IYY crossed over going up. That is a total market index fund back on the 16th of February. The market has continued to rocket up since then, except for one down day on the 9th of March. One down candle. This is a 2-day candle. What do we see going on? Well, we have a 2-day trend line that we have a number of points connected, and the market is continuing to rocket up. The derivative oscillator is still positive, losing some energy, but still positive. What we really pay attention to is the MACD. The signal line is well above, the MACD line is well above the signal line, have diverged nicely. If we look at the intraday movement, what do we see going on? Well, the market was up in the morning and in the afternoon, actually closed well above the what we call the Bollinger Bands, or actually volatility bands. Crossed over in the morning, going up on the 4-hour chart. Those of you who've been paying attention knew that you should have gotten into a virtual trade back on the 14th. You saw the market settle out a little bit, but has continued to move up substantially. Those of you who did any kind of practice options, you've done very well. Those of you who just bought in at about $1.80 or so, and have seen the market go up a good dollar already. So let's continue to move through our various indexes. This is IYY that we started with, always the total market. Now the next index we're going to go to is SPY, which is Standard & Poor's 500. 500 are the big movers in the market, a lot of the volume. This chart a lot of the time looks very similar to IYY, the total market, because it's so much of the volume of the total market, but it's a little different. Had a down day back on the 24th of February, a down 2-day candle on the 24th of February, and on the 9th of March. That second down movement was similar to what you saw in the total market. Again, the movement is well above the 2-day trend line. We're positive on the derivative oscillator, still losing a little bit of energy, but the MACD, our indicator that we like the most, the moving average convergence divergence, well above the signal line. If we look at what happened intraday, those of you who jumped in on a trade back like we talked about on the 14th have seen great appreciation of that. Nice appreciation. I guess if you would have gotten in back then somewhere around 102, 101, 102, 103, the market reached a high over the course of the day to 105.23, closed out at the last was 104.46. So looking very nice for those of you who've been paying attention and following our method. Still above the 2-day trend line. So we're very happy with the fact that what we talked about, we see proving itself true. It's not so hard to have the market work for you if you pay attention, you practice this kind of stuff, you pay attention to it day in and day out, and you control your greed and your fear, and you only trade, unlike a professional trader who has to trade every day because they've got to trade every day as required by their contracts and the people they represent. With your own money, first, capital preservation. Second, when you can make money, you want to make money, but you don't want to lose money, right? Now, what we're talking about, of course, are virtual trades until you learn what you're doing and you can make your own money. We are not a stock calling service. We do not give you market advice. Okay, lastly, we're going to the Qs. What's the Qs? Well, that's the NASDAQ 100, the technology stocks. It has been in an upward movement since it crossed over on the 2-day trend line a couple of days after the total market in the S&P 500. That was on the 18th of February. We've seen 2 down days, 2 down candles, 2-day candles on the 24th of February. 3. Again on the 7th and on the 9th. We're still above the 2-day trend line. The last 3 candles representing 6 days of movement have been positive. And for the record, the Qs was down 0.06% for the day. But if we look at our 4-hour chart, what do we see? We see continued up movement on the Hinken Ashi type of candlesticks that we use. We're still in the positive on the 4-hour chart. Hopefully you jumped in sometime back around the 14th, and you've seen quite a bit of appreciation. The market opened that day. The low was a 105.69. The high was 106.75. The market closed out over the course of the day on Thursday, the 17th, at 107.44. The high was 107.77. So not bad for a couple, well, 3 or 4 days of movement, still above the 2-day trend line. Hopefully, those of you who like trading the Qs have been seeing that work for you in your virtual trades. Now, lastly, we're going to go back to our 2-day chart, and we're going to look at gold. Gold was down 0.38%. It's in a long-term downtrend. That is, our 2-day chart is down. Derivative oscillator is down, growing in negativity. And the MACD is diverging further apart from the signal line. Not a great deal of divergence, but it's still moving further apart. We have pretty much a spinning green top. Again, we'll pay attention to that. If we look at our 4-hour chart, what do we see going on? Well, we saw a lot of movement up in the morning and then down movement in the afternoon. We don't have a crossover going up. To get into a negative play in gold, you're going to want to see the 4-hour chart crossover going up as it did back on the 3rd. Just so you can see that, or those of you who can't see it, I'll explain what went on. The chart rolled over on the 4-hour chart on the 3rd of March, moved up for a few days, and then crossed back over going down. That's what we want to see happen in order to find a good entry point to get into the down movement of gold. You might say, wait a minute, how do I make money when gold goes down? Well, you get an inverse gold fund that goes up when gold goes down. You can find that in all of the different things that we chart, both in the Qs, in the S&P 500, and in the total market. That's what gives you the ability, once you learn actually how to do this and start making your own decisions, to make money when the market goes up or down. Pretty interesting and cool. That's why it's so important to learn how to read a chart. That's what we talk about every day, and that's what you need to be learning to do. You want to find out more about how to do this, go to chartingwealth.com, sign up for our daily newsletter, and we will send you every day a video screencast of what we see going on in the market. We'll also send you a link to our How to Read a Stock Chart video, and in addition to that, we'll send you the layout that we use at freestockcharts.com. Join us on Facebook, Instagram, Twitter, YouTube. Email us anytime you want at chartingwealth.com. Sign up for the newsletter. Thanks so much for listening. Wish you the best in learning how to read a chart, because you need to always remember that it's not the media noise you need to pay attention to, it's the charts.